Traders, what's going on, guys? Let's take a look at today's markets. I've been trying to see exactly what we could do with this Euro U. If we go back over, take a look at the dollar real quick. This is what we're looking like on the monthly time frame. All right. So as you guys can see, the month of July has been somewhat consolidated. All right, about to clear out this month, and on Wednesday. And so, again, I'm not too surprised that we're losing momentum up here at these highs. If we take a look and kind of scale over, you guys will see that we just hit back off on a pretty major monthly resistance level from the high to the low. Where are we at? Right around that 38.2. So we're inside of that 50% area zone, 38.2% area zone. And so that's, simply from a technical standpoint, that's why we're getting our consolidation. Also, from a fundamental standpoint, yes, we have had, dramatic increases in the dollar, over the past two quarters. Q1, decent quarter, but Q2, really, we saw the dollar pull in for April, pull in for May. And those were really the 2 months that gave us the run that we got. June, we did end up seeing a little bit of a tick higher. But again, June crosses us back over nearing Q3. In Q3, things have been somewhat consolidated, right? So right now, Q3, we see consolidation. This is data that's, these are some of the rate hikes that I think have been priced in. We've had two rate hikes so far. We have a 90% likelihood that we're going to have a rate hike in September, okay? Not next month, but in September. August is next month. And so with that data, with that being said, the outlook right now for this US dollar, I think a lot of this shit's priced in. All right, let me pull over here. Let me show you guys what we're looking like from the weekly perspective fundamentally. We have consumer confidence coming out here. That's going to be coming out tomorrow. We also have Wednesday. Wednesday, we have the manufacturing PMI. That's going to be coming out. Remember, the PMI is the Purchasing Managers Index. Okay, that's basically an index of all the purchasing managers from big manufacturing companies on how they think the next few months are going to look, from a business standpoint, from a transactional, operational standpoint. Okay, so again, they are expecting a tick higher. All right, they are expecting there to be more production, more growth happening in the economy. You guys got to remember, on Friday we did end up having a 4.1 GDP release that came out. That was, again, somewhat positive, but that was already priced in. Expected was zero point 0.2. We hit off at 4.1. Not too bad. People were still raving about 4.1. Obama's never had 4.1. Trump's had 4.1. So again, outside of that, of course, we have non-farm payroll coming in, but even with non-farm payroll, we have the unemployment rate, average hourly earnings, and things of that sort. So it's a pretty busy week, right? So let's stay on the upper half of what we have going on this week. FOM statements and all these things. Again, we're not going to be raising rates or anything like that. That's why, again, it's likely that we're going to be raising rates in September, not in this week one of August. Okay, so basically what I'm saying from a fundamental standpoint, I do think a lot of this stuff is priced in. By the way, we have a non-farm payroll, 193,000 jobs added is what they're looking for. I do think a lot of this stuff is priced in, right? So the only way we can really have this dollar continue to rally is if we just get some rock star numbers, because you guys got to think. I mean, this dollar, we came in off of the year, okay, from the $1.25s. We're, close to a thousand, points, 1,000 pips, away from that high, okay. From the $1.25s, we needed to be down here at the $1.15s, and we've hit off on the $1.15s. Okay, so again, looking from a monthly perspective on the actual dollar itself, this is what we're looking like. Let me take off the fib. Let's draw this stuff up pretty simply. There's no need to overcomplicate the actual chart here. Boom, here we are from low to high. You guys can see that we're sitting here at this 38.2, right underneath it. Right underneath it. So it does give us opportunity to be exposed to this 50 immediately. Not saying that, these lines are perfect, the 38.2 or the 50, but, anytime I see so much wick action down here in these lows, this market could easily flow back down into those price areas, okay? So I want to sell this dollar off. I really do. This whole time, for the past 3 or 4 weeks, I've been saying, hey guys, I think it's likely we'll break $1.18 to run to $1.20 before we break back down and run to these 14s or to these 15 lows. But with the data that's coming out, there might be an incrementally small amount of U.S. strength that is left before all of this positive data is fully priced in. Once that is the case, it changes from us being able to run back to the $1.20s, and then it will be a prize for us to run back to the $1.18s. So our buying opportunity will be in the $1.18s, not in the $1.20s. All right, not our buying, our basically our take profit opportunity. So again, if we continuously consolidate right here in this price area, if we get any kind of wick fills down here to the $1.14s, the $1.15 lows, sheesh, potentially, on the extreme of things down to the 13s, that is an amazing buying opportunity to start to see this market trade back up into structure. All right, because we do have the euro potentially wanting to start heightening rates in 2019. The Fed fund rate is looking to start clunking off around 3.125. All right, in regards to where we could be by 2020. So only 1.12% left in regards to how much more this dollar can move. We have some other things happening in the bond market that's kind of showing us that the U.S. dollar is getting a little less tasteful. You have U.S. equities screaming to the upside. When we have U.S. equities screaming to the upside, I mean, look, we're about to potentially break all-time highs here for the month of January. We came in January really, really high. We're about to potentially break all-time highs, and again, usually, all right, I'd say maybe 54% of the time, barely any kind of edge here, but you usually have an inverse correlation with the S&P screaming higher and the U.S. dollar actually potentially getting weaker. Because remember, if the U.S. dollar is weaker, that allows our export numbers to increase. Okay, and then when our exports are increasing, that's bringing back more capital to the businesses, which is increasing their bottom line, right? Which is making it so that they're able to make more money. All right, so again, that's why Trump was talking about how he hated the idea that Fed Powell was raising rates, right? He's raising rates, and when you raise rates, you make your U.S. dollars more expensive. And when U.S. dollars get more expensive, boom, export business starts to clunk over. And by the way, exports were at an all-time high since 2014. We haven't had the export numbers we've had as of recently since 2014. So again, it makes sense as to why you start to get a slowdown in your actual equity market when the dollar starts to get stronger. So that's something that, again, we need to keep an eye on. So that's why if we're going to continue to see the labor market grow, if we're going to continue to see a tightening potentially of the unemployment rate. I mean, we're already down at record lows back in the the 3% area. I mean, then eventually this thing has to start turning around. And I'm thinking a little long term, but I think by the end of the year, we will potentially have a test of the 15s again, the 15 lows. I don't think we're never going to be back at the 15s. All right. But we will see this market start to turn around, and forecasting wise, I don't see why. There's just so much, there's a tremendous amount of upside for that euro. There's just a tremendous amount of upside for the euro. Even with all the positive shit coming into the dollar, we still have not seen that much of a strength move happening for the dollar. So that's all I'm saying there. All right. And moving on over, we can keep an eye out on the Australian dollar. I do like the Aussie structure. I was mentioning last week with some of our guys that basically, hey, look at all these wicks to the sell side. Again, we could potentially see wick fills. And what that means is, folks, that just means we have more opportunity for this U.S. dollar. Pound looks a little ugly. Pound negotiations, again, Brexit negotiations, not going so well on that side. I'll be posting some stuff about that on the YouTube later on today, guys. And U.S. dollar, USD CHF, again, somewhat consolidated at the highs. Not too worried about the CHF right now. Here we go. We do got the UCAD. UCAD data is coming out pretty strong. We have some interest rate numbers coming out for the Canadian dollar this week. And again, if we get some positive, they're looking to see some pretty positive numbers. And I think that means we could get a breakout of this last month's candle. So I think July could actually end up selling off, a little bit more than what we expected. And I think August, August 1, August 2, August 3, we might actually come in with a little bit of strength in that regard as well. Okay, so I'm thinking we will see a little breakout on the low end here for the $30s. That's something I'm just going to be keeping an eye on. USD JPY, it's an interesting story. We'll talk a little bit more about that. I'm not too keen on looking at that JPY right now. Let's head over to the exotics real quick, folks. Again, you guys know I've been keeping an eye on this Euro CHF. Last week, we mentioned that markets may come back down into this price structure and fill this price area. All right, and they did. Now we just got to see if they hold the price area, So, again, we have some pretty interesting Euro data that's going to be coming out. There's some Euro speeches happening You have some CPIs coming out. Let's see what else is happening for the euro. So here we go. PPI, Euro PPI. It's not too major. Let's see anything at the top here. So it looks like the CPI is the major data that's going to be coming out for the euro. German retail sales, that's always important as well. And then I think next week we might have a little more data coming out for that euro use. So I mean for the euro. So again, if we get a positive week for this euro, then maybe we can see markets start to screen back to the upside. That's something I'm going to be looking for. All right. So when it comes to exotics and the minors, all right, I'm still eyeing this Euro CHF. Okay, so Euro GBP is pretty interesting trade as well, but nothing there that I really want to see. I just like keeping an eye on it. And as always, it's amazing. This GBP AUD has been pretty interesting as well, just based off the fact that we saw markets turn to the upside, and we were saying, hey, maybe we can get a sell-off. And just look how freaking consolidated that trade has been. You would be in that trade right now, you know, geez, for the past 3 or 4 weeks. So that thing is very consolidated, unlike the GBP AUD. GBP AUD used to be a currency that flowed really well. Notice this, not much consolidation. All right, but notice right now we're getting a tremendous amount of consolidation here. And that's just because we have a weakening pound and we have a weakening Aussie, which is just tying this market the hell up. It's not going anywhere. All right, so guys, I want to continue to keep an eye on this Euro CHF. If we get this Euro strength this week, which I feel like we may see a bit of it, all right, at least relative to that CHF, then I think we may see markets start to turn to the upside. Do we have CHF news this week? Swiss news, let's see. I'll take a look at it, guys, and I'll throw it back out on today's markets for tomorrow, but it doesn't look like we have too much Swiss news coming out. So it looks like this week, if we do get a move on that pair, it'll be dominated by the actual Euro. If there's anything else you guys are looking at, please let me know. Here's another situation here for the pound, pound JPY. I know some folks wanted to buy down here in this low. It's been somewhat consolidated. Guys, I'm going to keep an eye out for some of these, potential setups. Again, I'm just looking for a nice technical structure to play and aligns with the fundamentals. I'm not solely just looking at the fundamentals. Because if I solely look at the fundamentals, goodness gracious, you will get a little overwhelmed. Look at the technical structures, get an eye and get an idea as to how technically right now markets are structured. Here's another example. Take a look at this. You got the Euro and the Aussie extremely consolidated. All right, there's an opportunity that's going to come out of this. Okay, whether it's the Euro finally bringing in some strength and selling this market back down to the downside here, or Aussie, just showing more weakness because of the China trade war things. Maybe that could be what sells us off, or vice versa. Maybe China stuff lifts, bringing some strength back over to the Aussie dollar, and then boom to the upside. Or maybe the Euro idea, is something that starts to weaken and then boom to the upside. Again, I am betting that the Euro AUD would sell off before it starts to buy out. China trade war shit, a little bit intense. Euro, I think we may see a little bit of strength. There's just so much upside there for the Euro. I hate to see Italy's one of the people inside of their government is looking to continue referendum talks. So potentially an Italian referendum. That shit's not good for the Euro. That's going to tie us up a bit. We have to see. But I do want to keep an eye out here on this Euro AUD. When you see markets tied up like this, eventually one has to budge. One's going to get weaker, one's going to get stronger. It's going to allow you to have a very beautiful breakout, all right? So let's keep an eye on it. Look, this is a weekly, so who knows when this shit's going to play out. Could happen this week, could happen next week, who knows? We do have some Aussie data this week, and if this Aussie continues to, again, gain a little bit of weakness, then we will see market break back down in the structure. If we see some Aussie strength, then, hey, maybe you want to play a little quick buy opportunity for this week, breaking 58.90s, 58 flats, back up into structure. We'll see. All right, so this is something I'm going to keep an eye on for you. I'll keep an eye on this Euro AUD. I'm keeping an eye on that Euro CHF. And, of course, I'll be keeping an eye out on this Euro USD. And NZD USD was also something that I was going to keep an eye on. So 5 pairs that I'm looking at. UCAD. 6 pairs that I'm going to be looking at this week, folks, that I do like from a structural perspective and that also have some pretty decent fundamentals backing it. Let's keep an eye out, folks, to see what we get. If you guys got any questions, let me know. All right, let's have a good week.